Well, you lead both public and private investing. And so in private markets, at least for a while, you only get a buy button, right? You don't have a sell button that often. And in public markets, you do get that sell button. Every day you can wake up if it's a Monday through Friday and there's no holiday. How does that shape your thinking when evaluating a private company today?
Look, our public market practice, CJ, is very much focused on a private equity approach, right? So we are not traders by any stretch of the imagination. Our underwriting is usually 4, 5, maybe 10 years in a lot of cases.
Wow.
And so when we think about buying something in the public market, we have done almost the same kind of work that we would have done when we were doing a private investment. So I'll make the nuances for private as a result of it. So we're really understanding, the durability of the business model, the quality of the management team, how they're thinking and articulating the business to the investors, how they're efficiently deploying capital. Are they good stewards of capital? Those are metrics that we really, really study in a very, very intricate fashion. And when we do the private investing, as you said, you don't have the opportunity to, there's no sell button. This is a relationship. The only caveat here is that all of the same attributes that we see in a big, more mature public company, we want to see in an early company. And not from a metrics perspective, but the thinking, the thought process, the desire, the want, making sure the moats are in place, how they're thinking about constructing the business. They're not thinking of this as a flash in the pan and building it for M&A. It becomes very obvious when you spend, 3 or 4 meetings that this company is getting built for M&A versus built for, life in the public markets. Not that we're looking for liquidity, but more from a durability perspective, margin of safety, how you want to think about it. And I think that's where I think the private side and the public side work together for us. It's the same team that does both. And so in some ways, as we build conviction on the public side, we can look at things on the private side and say, yes, I think these things have all of the right signals. Now, not all our companies will go public, but that's key to our underwriting criteria. And it's more of a relationship at that point. And so it really plays to sense. If we get that right, there will be ups and downs, but we know that, the company is driving towards some specific goal that we are aligned to and supporting and helping build.
Can you say more about that it's the same team that does both? Because some firms will say, whoa, these are like two different fields of investing. And others will say, well, don't you get better by doing one and bringing those learnings to the other? How do you think about that?
So there is a major minor concept. It is the same team. And so we run one big meeting, the public team that is sort of their major, spends time looking at all of our private companies, and they're weighing in on all the private companies. The private team is sitting on all the public team meetings. And so they're understanding the kind of discussions we are having in detail. Why is, ServiceNow the biggest position in our portfolio, hypothetically speaking, or Google or Facebook or whatever it is. And so we're discussing all these elements. And I think that forms the rubric under which you make, or the mosaic under which you make better decisions. So an investment professional in our firm, they just don't, it's always a major minor, and you have to focus on something. And so they are underwriting to their core practice, whether it's growth equity or early stage venture or public markets, but they take 20-25% of their time and they're involved in all the other things. And so in some ways, this allows them to become better investors. And because we're an evergreen fund, it's one balance sheet. And so when a company goes public or something like that, it is the same team that continues to, advocate for the position with the help of the public team. And in some ways, there's no loss of fidelity. There's no loss of conviction in our holdings, because all of the work that we have done over the last 10 years translates to the public team. In a lot of cases, and this is, by the way, because a lot of the allocators, if you think about where funds are situated, the people who invest in public market funds are very different from the people who invest in private funds. And so as a result, even though it's the same banner or the same firm, it's two separate LP bases with two separate investment teams, because the allocator thinks of the world in two separate buckets. And no matter what happens, when something goes public and it's handed off to the other team, there is a loss of fidelity. There's loss of conviction. You may know some things, but you may not know it the same way that a private investor that spent time building the business would.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, lol. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.